Hello, traders. It's 8:03 a.m. Chicago time on Tuesday, the 8th of September 2020. This is episode number 1835. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk off yet again. We've taken back a lot of what we did Friday. Now, one thing to remember is that yesterday was a holiday in the U.S. and the data for yesterday is has been wiped off. It just doesn't count. It's really Sunday session, Sunday night, Chicago time at 5 p.m. or Sunday afternoon, I should say. The session begins, and that same session goes through today. So this is all one session. And so that's where we stand. We've moved back. Currently, we had a nice push higher on Friday from the low of on the S&Ps from the low of 33.47 ish all the way up to 34. About 100 points, 34.49 or 50. And we closed at 34.18 or so, or 34.15 really. And then since then, we gapped higher yesterday, and then we have been selling off. One thing to note is crude oil is the weakest of the bunch today. It's down 6.56 and trending down 6.56%. Crude down $2.61. Huge down day for crude, trading at 37.15 in the October contract. The Nasdaq's off 3%, down 348 points, or 11,200 is the price. The Euro Stoxx 50 down almost 2%. The DAX down 1.6%. The S&P down 1.32%, or 45 points. Still inside of Friday afternoon's range. And then the Dow's down 216. Gold is trading close to 1900 and 1920, or $13.5 down, or 0.7%. The leaders today are the bonds, the dollar, the Bund, and the 10-year. The bonds are up a handle and 4 ticks. So clearly risk off again today, coming into today's session. So we're going to be looking for signs of the market establishing a base to rally from, or is it going to continue to sell off after what has been just an incredible rally over the last couple months? So that's what we need to identify this morning and trade off of. In terms of what's on the calendar, one thing I want to make clear is that this Thursday is rollover for U.S. indices. The treasuries have already rolled. The 10-year note, the U.S. Treasury bond, and the other U.S. Treasuries have rolled. The Bund has rolled. All trading December. All the trading December contracts, make sure that that's what you're looking at if you are referring to those products. And then this Thursday at 8:30 a.m. Chicago time, we're at the open. Really before the open, the exchange officially rolls to December contracts on the indices. And that kicks off our rollover on Friday through the following Wednesday or so. Quad witching Friday is next Friday. So quad witching will be the 18th of September. That'll be expiration. But again, the second Thursday of the month is rollover, and that'll be the 10th, and that's in 2 days. Another thing I want to make you all aware of is that tomorrow I'll be here to do the Trader Bite, but I'm taking off in the late morning for a 2-day break. Haven't had a vacation so far this year, and taking a two-day break. I will be here Thursday morning to provide the premium numbers, to provide the adjusted rollover, and to shoot out some images of a composite so that people can compare their highs and lows and make sure that they're in line with the December contract. But I will not be here to do a trader bite on Thursday or Friday. Okay. In terms of the calendar, quite a few Treasury auctions today. Starting at 10 a.m. Eastern, we start with a 3-month bill auction and a 6-month bill auction. Then we have a 119-day bill auction at 11:30, 42-day also at 11:30. At 1, we have a 3-year note auction. At 1, we also have a 52-week bill auction. And then we get consumer credit change at 3 p.m. At 3 p.m. today. And then this evening, a key number for China, the inflation rate year on year is expected at 9:30 p.m. The forecast is for plus 2.5%. We'll also get PPI out of China at the same time. The expectation is negative 1.5. For the rest of the week, the key number coming out tomorrow, Wednesday, is going to be the Bank of Canada's interest rate decision. Other than that, there's not much. There's not going to be crude inventories tomorrow because of the holiday yesterday. Thursday, we get the ECB decision. That is, of course, key. The deposit facility rate and the marginal lending rates will be announced. And the ECB press conference, this is their FOMC essentially. The ECB press conference at 8:30. That'll be Thursday. That's key. Initial claims as well as PPI in the U.S. at 8:30 on Thursday. Wholesale inventories, and we get crude oil and gas inventories, not gasoline, but gas inventories. And that wraps up Thursday. And then Friday, we get balanced trade out of Great Britain, inflation rate out of the U.S., and core inflation out of the U.S. Before we wrap up the week. Again, take it easy after Thursday in terms of monitoring volume and the delta and so on, as it'll be skewed by the rollover. I'll post images of the rollover and its progression, and we'll let you know when volume or the delta is back in play. In other words, order flow is back to normal. In terms of what was expected on Friday, unfortunately, I did that thing where I closed the wrong image. Now I got to recreate it. Give me 2 seconds. I clear my desktop before the broadcast starts, and sometimes I just clear off too much. So on Friday, we have this mess here, this messy image to look at. On Friday, the primary scenario, remember we talked about Thursday was an impulse down, was pretty much a certified impulse down, and on Friday expected either a break away from selling, so we get a consolidating day. We would have a market that is basing or resting, and then a continuation after that. Or the secondary scenario is that we don't take a break and we make a very weak attempt pushing higher, and then we continue lower. And that's basically what happened on Friday, pushing the overnight low and continuing lower into the 3,400 area. I cannot predict the range here because there are bigger things at play here. There's that big option play in the mega caps and mega tech stocks that has been unwound, and therefore the Nasdaq is taking a big hit, and it's hard to tell how far that'll carry the S&P here. But the secondary scenario is really what was in play Friday. Here's what took place. Really a busy chart. Here's Friday. We pushed higher just like we expected. Pull down, push higher. Very clean and clear opening swing between 54 and 77, which is, by the way, a very, very wide opening swing. That tells us the volatility is in play. And then we broke below the opening swing low, pull back to the opening swing low, first chance at the short, and then with the aim at while aiming for the low of the prior day, 34.2450. It gets pretty close, pushes up, and then we finally break through, and we continue the selling. Friday, we pushed against 33.51. We really got to 33.51 and pushed through by a couple of points. This is a key microcomposite area. It's marked right here, 33.51. Let me move the margin over. This is basically the microcomp. This appears as a big high volume node in the composite, and we basically held it. We bounced up, pulled back, bounced up to the IB low, pulled back, and then from there we carried over into the mid, which traded very, very well. We had actually an unusually clear push into the mid. We had an impulse consolidation continuation that failed and came right back before pushing higher, and we ended up with multiple distributions on Friday. We had basically 3 distributions on Friday, and we're currently trading in the lower distribution. This morning and holding this 33.71, which is also a microcomp. You know what? Let me pull up my my flex entry chart. Just load it here for a second. This is a chart I use to figure out the big areas. It's just easier for me to show what's going on here. And if you look to the right, let me change my pen color for a minute. I just want to make sure we're looking at context properly. We put in an all-time high here on the 2nd of September following a gap. So we had a gap, we put in an all-time high, and then the next day we opened below mid, tested higher, and that's the big day we sold off. We basically took back 6 days of trading, still held the next gap down, which was the 33.96 and a quarter to 34.05, I believe, is where the gap was right here. Still held this upper distribution at this point, which is what this micro composite is built on. And we took a bounce. And this is why, because we were holding this upper distribution, the expectation on Friday is consolidation and then a push back to this high volume node up here, which is 3504 area or so. That's Friday. That's why we had the first scenario is really a pullback, because despite the fact that it really stabbed in here and took out all of these days and all this one time framing that has occurred, it still held up pretty good despite it looked like it was a lot of bloodshed. It still held up pretty good, and so the idea was, hey, this is a buy the dip kind of decent scenario for a trip back to 3504, 3500, and that's what I was shooting for on Friday, or as the main scenario. What we did though is we turned higher, and then we started to sell off. And if you look down below, we had several key areas. One of which is this 71 area that's just above us, the 60, the 71 area, and then below that is the 51 area. That's these high volume nodes right here. These are important down below. If we look farther down, we'll see that we're starting to hit some structure. We've got a low volume node at 33.27, which is the next key target down. Remember, we're at 33.66. We can get there quite easily. It's just 40 points down. And then we get into the next gap zone, which is from back here. And then we have confluence of 50% of the swing along with a composite point of control or high volume node, and that becomes the next big test area down here, 3288. Okay, so as I'm talking here, we have 51, which is the area that held on Friday. 51. Below that, we have 27, 33.27. Then we have the gap. And then below that, we have 32.88 as the big areas down below. And 32.88 is only about 80 points below. And that would be the next big area to be considered to be concerned with. If it takes a bounce today, then look for Friday's close as we trade this wick from Friday's range. This was quite bullish. This wick here from Friday shows an excess above 3,400. We ended up closing at 34.18 and a quarter on Friday and for the week, and we've still come back down and are trading in the 33.66 area over here, and so we are back in this balance. So we've shifted from trend to the balance below. If we cannot hold this balance below here, then 32.88 becomes a big target because that's the next balance. And then below there, we have the 32.27 as the next big bounce area. The market moves from high volume node to low volume node to the next high volume node to the next low volume node until it finds its buyers if it's selling, or sellers if it's buying. So consider that right now we're kind of doing this, and the question is, do we then break below and take out this 32.77? That's the low volume node right here, right? If we break below the 32.77, then you're going to look for the next high volume node. 32.27, and the next high volume node is 32.88. This is the big picture as we migrate from thinner areas to high volume nodes to thin area to high volume node to thin area. That's the course of the market. And at new all-time highs, this process becomes very difficult because we don't have a frame of reference. And now we do after the sell-off, but we don't have a frame of reference on where those high volume and low volume nodes are. And so we want to keep track, close watch over these composites. As I zoom away, see that 32.77? That becomes the next big balance. Then below there's this next big balance because the market moves. Market has memory and it moves from balance to balance to balance. So there's balance there. There's balance here. This is what has held us up so far. And last week's sell-off is this initial balance with a micro composite at 33.51 and 33.71. If you look at your charts, you'll notice there's quite a bit of play at 33.71. So if we can't hold on to it this morning, we're just 5 points below. If we can't hold on to it this morning and we start to migrate down, then you're going to want to pay attention to 33.27. If 33.27 holds and it turns back up, then you're looking for 71 again. If it doesn't hold, if it kind of bounces and falls through, then again, I'm repeating myself, I know, I just want to make sure you know the map, 32.88, which is 40 points below that. If it doesn't hold 32.88, then we have a gap zone below, and repeat and repeat and repeat, and it comes, and then we start to move towards 32.27, right? So that's 150 points below where we are. This is what we're looking at in terms of the overall map. Just remember, as we're sitting here trading the minutia, trading these tick charts and stuff, you want to keep track of what the big picture is doing. You want to keep track of what the delta is doing. How feverishly is the market trading these certain levels, and that's what we're looking for here. Let's take a quick turn and look at Bookmap. You can get this at ctbookmap.pro. Bookmap shows Bookmap's been tough to glean anything from because of the way the market has been kind of quoting. If you look at these prongs here on the offer, There's just some odd, like I've described a couple weeks ago, there's some odd behavior here at these strike prices, and I indicated that it just seems like there's some big option plays because we're seeing these weird offers and bids throughout the book, and it turns out this whole rally's been a call option squeeze um, on the mega. If you've heard of the SoftBank thing over the weekend, the big news, it kind of makes sense to me because I'm seeing these bids and offers that are way out of whack at specific prices. Look at this here, 33.50, 707 bid. Just seems like there's a lot of option play here. And if you look at the option volumes, they've been, and vol has been high. Option volumes have been quite high. And so what you have here is just a lot of noise in the order book. Okay, so as we look at what has occurred since yesterday, we have traded, imbalance this morning. We've held an overnight point of control at 34.35 or so. 34.35 or so, and then we have sold off since the European Open, and we're in this down channel, selling off pretty good. Remember, other areas are selling as well, and this is selling in sympathy. So let's move on to what's expected for today. So as previously indicated, um, we have some key areas to pay attention to below us, 33.51, and we move down into the 3300. We do have 3266 and so on and so forth. This morning, the way this may be zoomed out a little too much, maybe not. I don't know how much volatility we'll have today. But the expectation this morning is that the market is likely to initially be responsive, looking for the market to push higher, hold these levels, push higher, and come back in response and come back to the middle distribution of Friday. Looking for the market to be responsive, consolidate, and I'm looking for it to extend below. Friday we finished below the one volatility sigma. So I'm looking for this low to be taken out from Friday's low, and then I'm looking for the market to ease up and consolidate for today's session. Really, we're looking for a balance day. Remember, the market is aiming to come back into balance um, as it's seeking lower prices. And if you look at what has happened on Thursday, this low volume, this point of control at the low end, and then Friday, which is somewhat balancy. We sold off earlier, but we really balanced out on Friday. I mean, whether you see it or not, the fact is Friday put in a lower low, but it was semi-balanced. We finished above the mid in the upper distribution of the range, and we have sold off since. This is finding some traction here from buyers, and I expect that it is likely to hold on and push up. So that's the primary scenario. The secondary scenario, responsive buying that brings us back higher, pulls back to the open, and then starts to squeeze. And the squeeze is expected back at the overnight point of control, which is on top of Friday's point of control. And then we start to work our way back into that 3504 area, 3504 as the key target. And this is a market that has stabilized, and now the buyers come back in to scoop up bargains, right? A lot of cash still sitting on the sidelines, and the expectation is it's likely to find traction and push higher. Now, the overall market sentiment in the overnight session is for selling, so the primary scenario is a seller, and it could push into that 33.27 area, this low volume node down here, and work through some of the levels we talked about in the prior image, in the prior chart. Don't know, and it, the low here of the primary scenario could be around that 27 or potentially move into the 3,300 area, but and I'm prepared for that. But overall, I'm looking for this to find some traction and hang tight as a primary expectation. I'm looking for this to turn higher. And by the way, scenario two is not likely to push 140 points higher. I'm just saying over the next, scenario two is likely to end somewhere down here. If we can get back into the overnight point of control at 34.33, which is 70 points higher, that's good enough. 3504 is going to be the target for this week, where I'm expecting the market back at 3504 at some point this week is what I'm getting at. Okay, hopefully you've gained something here. Good luck, and if you have not subscribed to this channel, don't forget to subscribe. You can do so by going to ft71.com/YouTube, all lowercase. Hopefully you gained something here today. Make sure you keep the big map in mind while you're trading in the short term. Getting caught up in the noise is going to get you lost. Good luck.